Hi guys, welcome back to Father and Son Investing. We're going to revisit a stock that we've covered a couple of times now. They had their earnings call earlier in August. I was busy moving then, so I actually wish I could have used OpenDoor when I was moving. It was really quite a hassle. And the thought of a company that can do this, if they can make their offers competitive, really sounds quite appealing. So if you're not familiar with OpenDoor, they have tried to revolutionize the home selling process by essentially buying your home or you selling your home to OpenDoor, then buying your home. What happens is you will go online and you fill out just this easy questionnaire. I actually did it just a minute ago. They use publicly available data to initially populate the details about your home. You then make any changes to your home that are incorrect. Then it will ask you some questions about some of the details of your home, like what sort of countertops do you have. After a few other questions about how you came to find OpenDoor, etc., they will send you a preliminary offer to an email account. All of that process takes about 5 to 10 minutes total. Now, once you do the preliminary offer, then you can decide whether you want to go further. If you do, you get to do a Zoom call with OpenDoor. You will walk around your home during the Zoom call and essentially show your home over Zoom to a representative of OpenDoor. Essentially, within about 3 days, if you want to, you could have your house in escrow. Now, unfortunately for me, OpenDoor wasn't available in the market that I was selling from. But they are available in these 41 markets now. So what we'll talk about during this video is number one, their second quarter earnings report. Number two, whether this company's valuation is appropriate right now. All right, in the second quarter of 2021, OpenDoor acquired almost 8,500 homes, generating revenue of $1.2 billion. The number of homes that they acquired represented a growth of 136% compared to the first quarter, and their revenue growth was 59% compared to the first quarter. Now, here was the big take-home message from the second quarter report. Based on the current momentum, meaning the way that they're selling right now, they're operating now at a second half revenue run rate that is on track to meet what their goal is supposed to be for 2023. So we're looking at, if they were to continue to sell houses at the same rate for the next 12 months, they're almost 2 years ahead, essentially, of where they expected to be. Now, in the second quarter, they added 12 markets, which brought them up to 39 markets. They have since then added 2 additional markets, which is where we get to 41. Let's just talk briefly about what they have issued for guidance for the third quarter. They're looking at 1.8 to 1.9 billion in revenue and an adjusted EBITDA of 15 to 25 million. If they hit their revenue target for the third quarter, that's going to be a 56% sequential growth over the second quarter of 2021. Now, with this strong second quarter report, the OpenDoor stock certainly had a nice little rise here. They announced this in early August, and then the stock has just been steadily climbing. But it is well off its highs of approximately $36 per share earlier this year. The company went public via a special purpose acquisition merger. Of course, the chief investor in that SPAC company was Chamath Palihapitiya, and a lot of his SPAC mergers have kind of taken it on the chin, particularly Clover, certainly one that's trading below its initial $10 SPAC purchase price. OpenDoor Technologies then is doing relatively well for a special purpose acquisition company, but its share price may be held down a little bit because of the way it went about being a public company. So let's try to figure out if OpenDoor is currently undervalued. So according to this article in Investor Place, the company is on track to make $6.65 billion this year in revenue. Some analysts have them making less than that at $6.26 billion, so we'll take an average of essentially $6.5 billion. That means that OpenDoor is trading at about 1.6 times sales. That is the price to sales ratio. Now let's just look at this forward a little bit, though, because really the price of OpenDoor especially is really based upon how we as investors think that they will be doing in the future. So the future forecast for sales for 2022 is 12 billion. That is a nice number. Not quite double what it is this year, but still quite nice. Other estimates are saying just shy of 11 billion. So the author of this article takes 11.3 billion as an average and implies that price to sales, and he's coming up with 0.91 times price to sales. Now, generally, anything less than 1 is going to be a fantastic price, as long as the company actually is a solid company. 1 to 2 is a good price to sales ratio. So right now it's still in the good range, but potentially next year could be in the really very good range. The author then applies the August 26th price to sales multiple and comes up with an $18 billion valuation for the company next year. He concludes by saying then that the stock is worth $30 per share. Now, all of this share price increase is based really on the prediction that OpenDoor will continue to grow its business. What things could derail OpenDoor from doing that? Well, let's look at one of them. They managed to purchase 8,494 homes in the second quarter. But how many homes did they sell? If we drill down into their report, we're going to see that they sold 3,481 homes. So they took in about 5,000 more homes than they sold. What does that do? It creates this very, very valuable and potentially volatile inventory. Their inventory of homes was worth $2.7 billion at the end of the second quarter. As long as these home prices continue to increase, then OpenDoor is going to be fine holding this amount of inventory. But if home prices stay stable or should decrease, that is going to significantly affect their top line and their bottom line. What else could have a significant impact on OpenDoor's ability to continue at this current growth rate? Interest rates. Right now, interest rates really are at all-time lows. I thought I had a great interest rate at 3.25% when I refinanced in 2013. That pales in comparison to what interest rates are now. You can get a new home loan in some places for 2.25% at 30 years, or even under 2% for 15 years. Now, if interest rates rise back to their previous levels of 3 to 4%, well, that is going to significantly affect a buyer's ability to afford an expensive home. And people buying less expensive homes is going to certainly affect OpenDoor's top line and bottom line. Now, what is OpenDoor's counter argument to this? They are noting that we are definitely in a seller's market right now. And even in a seller's market, OpenDoor is managing to increase their revenues. They are also gaining more and more data. And as they continue to do that, they think that they can refine and streamline their offers to keep them competitive, but also allow them to make a profit. I think below $20 sounds like a fantastic price, and anything really 16 or less is definitely, for me, a strong buying point. Now, I don't know how often we're going to see that, especially if home prices continue to appreciate at their current rates. We sold our home for approximately $17,000 more than the Zestimate was at the time we sold it a month ago. And I noticed today that the Zestimate for that house is now $2,000 more than what we sold it for. I hope this was informative for you. If it was, please give us a thumbs up and please share it with a young person in your life. Until next time, enjoy your investing.